Hello, welcome to Accounting Hub. I'm Professor George Carpin, PhD in accounting, and our topic today is share-based compensation restricted stock plans. So first of all, guys, please subscribe our channel, like our video, and like our Facebook page, Accounting Hub by Dr. Scarpin. What is this about? These plans usually are tied to continued employment. Two primary types of restricted stock plan: restricted stock awards and restricted stock units. Restricted stock awards. We have the shares and we award it in the name of the employee. And subject to forfeiture by the employee if employment is terminated within some specified number of years from the date of grant. Not free to sell the shares during the restriction period. Once the shares vested, the restrictions are lifted, paid in capital. Restricted stock is replaced by common stock and paid in capital. Excess of par, any market price changes that might occur after that don't affect the total compensation. And how these stock units work is a right to receive a specified number of shares of company stock. The company distributes the share after the receipt of restricted stock units satisfy the vesting requirements. The recipient benefits by the value of the shares at the end of the vesting period. And the terms of restricted stock plans vary. The recipient sometimes is given the cash equivalent of the number of shares. The terms might stipulate that either the recipient or the company is allowed to choose whether to sell it in stock or cash. So that depends, guys. So, how does it work? Let's go to our Excel file. Let me find it. It is here. So, let me delete this one and we are good to go. Under its restricted stock unit plan, Skype Corporation grants RSUs representing 12 million of its one par common shares to certain key executives at January 1st, 2021. So, January 1st, we have no journal entry. We are only granting these stocks. The shares are subject to forfeiture if employment is terminated within 4 years. And shares have a current market price of $8 per share. So I just copy and paste the numbers here to make it easier. And okay, what do we have? How much is the compensation expense? So let's come back here. How do we find the compensation expense? The compensation expense will be $12 million times the market price, $8. So this is our compensation expense. Delete it here. However, it is for 4 years. So how much is the compensation per year? 96 divided by 4. So $24 million per year. So over the next 4 years, December 2021, 22, 23, and 24, compensation expense, just like any other expense, paid in capital restricted stock. So restricted stocks, usually we are not allowed to sell them. And at the end of it, now these executives, they are free to sell it. So what is our journal entry? We close this paid in capital restricted stock. That is the 96 million or 24 million times 4. So $96 million. We are closing it. And our credit, common stock, just like any other common stock, number of shares times par value, $12 million. Paid in capital, excess of par, the number to balance, or $12 million times the difference between market price and par value. And here, guys, it doesn't matter the market price on December 31st, 2024. What matters is the market price on January 1st, 2021. This is where when we are issuing our shares. Okay, guys, so thank you so much. Questions or comments, leave it here or email me at jscarpin@gmail.com. Have a very nice day and God bless you.